Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Dow Inc. Annual Report. Dow Inc. offers a diverse range of businesses and services across various segments. At its core, the company provides materials science solutions for packaging, infrastructure, mobility, and consumer applications globally. The packaging and specialty plastics segment is one of the key areas of focus for Dow Inc., offering products such as ethylene, propylene, polyethylene, and aromatics, as well as other derivatives like polyolefin elastomers and ethylene vinyl acetate. This segment also includes construction chemicals, coatings, adhesives, sealants, elastomers, and composites. The industrial intermediates and infrastructure segment provides a range of products including polyurethanes, aromatic isocyanates, chloralkali and vinyl, and construction chemicals. These offerings cater to various industries such as construction, automotive, and consumer goods. In addition to its core materials science solutions, Dow Inc. also engages in the property and casualty insurance, as well as reinsurance business. This diversification into financial services further expands the company's reach and capabilities. The performance materials and coatings segment rounds out Dow Inc.'s offerings, providing architectural paints and coatings, industrial coatings, acrylics-based building blocks, silicon metals, siloxanes, and intermediates. Overall, Dow Inc.'s diverse portfolio of businesses and services enables it to serve a wide range of customers across various industries. Unfortunately, I do not have access to the text you provided. However, I can still provide a general overview essay on what may cause Dow Inc.'s stock price to drop. The stock price of any company, including Dow Inc., can fluctuate due to various market and economic factors. One major reason for a decline in stock price is poor financial performance, such as decreased revenue or increased expenses. This can be caused by a variety of factors, including changes in global demand, competition from other companies, or unexpected costs associated with production. Another factor that may contribute to a drop in stock price is negative news and publicity surrounding the company. This can include issues related to environmental concerns, labor disputes, or product recalls. If investors perceive these issues as significant threats to the company's future success, they may sell their shares, causing the stock price to decline. Additionally, changes in market trends and investor sentiment can also impact a company's stock price. For example, if investors become increasingly concerned about the global economy or specific industry trends, they may shift their investments away from certain sectors, including chemicals and materials, which is Dow Inc.'s primary business. Lastly, external factors such as interest rates, inflation, and government policies can also influence a company's stock price. If these factors are unfavorable to the chemical and materials sector, investors may become more cautious, leading to a decline in stock price. The primary drivers of revenue growth or decline for Dow Inc. can be summarized into several key areas. Revenue growth is primarily driven by the Packaging and Specialty Plastics Reporting Unit, which exceeded its carrying value due to projected revenue growth and current market conditions. Additionally, Consumer Solutions also reported significant revenue growth. On the other hand, revenue decline was observed in polyurethanes and construction chemicals due to oversupply in the industry. Another key driver of revenue growth is the increase in net sales, particularly in 2025, which saw a $76 million increase in unrealized gains on investments. Sundry income expense, net also played a significant role, with a decrease in losses reclassified from AOCL to net income contributing to revenue growth. However, interest rate contracts and commodity contracts had a negative impact on revenue, resulting in losses recognized in income. Dividends declared and paid by TDCC to Dow Inc. also declined significantly in 2025, further contributing to the decline in revenue. In terms of geographic regions, sales to external customers in the United States increased in 2025, while the rest of the world saw a slight decrease. Long-lived assets decreased by $12,490 from year 2 to year 3, indicating a decline in asset value. Overall, the primary drivers of revenue growth or decline for Dow Inc. are complex and multifaceted, involving various factors such as market conditions, industry trends, and geographic regions. The net income of the company experienced significant fluctuations between 2021 and 2025. In 2021, the net income was $5.6 billion, but it decreased to $1.2 billion in 2024. However, in 2025, the net income plummeted to a loss of $2.44 billion. This drastic decrease can be attributed to various factors such as volatility in feedstock and energy costs, negative impact of NGLs becoming less advantaged than crude oil-based feedstocks, public health crises, macroeconomic downturn, and market conditions. The profit margins also underwent significant changes during this period. In 2021, the profit margin was 9.5%, but it decreased to an uncalculable figure in 2024 due to negative net income. In 2025, the profit margin dropped to -6.08%. This substantial decrease can be attributed to the same factors that contributed to the decline in net income. The company's financial performance was severely impacted by various external and internal factors. The volatility in feedstock and energy costs had a significant impact on the company's profitability. Additionally, the negative impact of NGLs becoming less advantaged than crude oil-based feedstocks further exacerbated the situation. The public health crisis, or global outbreak of disease, also had a negative impact on the company's financial performance. Furthermore, the macroeconomic downturn, market conditions, and announced restructuring actions also contributed to the decline in net income and profit margins. The goodwill impairment charge of $690 million recorded in 4Q 2025 was another significant factor that contributed to the decline in net income and profit margins. This charge further reduced the company's profitability and had a negative impact on its financial performance. Overall, the company's financial performance was severely impacted by various external and internal factors, leading to a significant decline in net income and profit margins. The company's debt level has undergone significant changes over the past year. Initially, notes payable to banks and other lenders decreased from $135 million to $90 million. However, this trend was reversed as long-term debt increased by a substantial $1,211 million, bringing the total to $2,778 million. Furthermore, asset retirement obligations also saw a notable increase of 75%, rising from $174 million to $304 million. In terms of interest expenses, there is a clear indication that they have increased significantly. The data shows an increase of $54 million, 6.7%, in interest expenses from 2024 to 2025. This trend is consistent across multiple pages, with net changes and specific figures all pointing to a rise in interest expenses. Overall, the company's debt level has increased, and its interest expenses have also seen a notable surge. The company's financial performance varied across different segments and regions in the recent period. On a positive note, packaging and specialty plastics was a standout performer, with notable mentions on pages 29, 36, 39, and 42 of the financial documents. Performance materials and coatings also showed strong results on page 29. In contrast, industrial intermediates and infrastructure struggled, with poor performance highlighted on pages 29, 36, 38, and 88. Hydrocarbons and energy was another segment that underperformed, particularly in terms of revenue, as noted on page 88. Geographically, the U.S. and Canada region saw an increase in volume due to higher energy sales, while the EMEAI region benefited from a favorable currency impact on sales. However, Europe faced challenges, with Consumer Solutions announcing the shutdown of its basic siloxanes operations. The EMEAI and Latin America regions also experienced declines in volume, with 4% and 11% drops respectively. Overall, the company's performance was mixed, with some segments and regions showing promise while others struggled. The company is committed to a sustainable future through its strategic initiatives. By 2030, it aims to decarbonize its operations by reducing Scope 3 emissions through partnerships along the value chain. This goal is part of a broader effort to transform waste into circular and renewable solutions, targeting 3 million metric tons per year. The company's financial strategy is also robust, with a strong balance sheet and financial flexibility. It actively manages market risks through hedging transactions and derivatives, ensuring that it maintains a healthy leverage profile. Additionally, the company has implemented a green finance framework to support its sustainability strategy focused on climate protection and a circular economy. In terms of investment strategy, the company prioritizes managing plan assets in relation to liabilities to pay retirement benefits to participants over the life of the plans. While restructuring costs are expected to remain significant, the company is taking steps to address pension obligations through non-cash settlement charges. Overall, the company's outlook and strategy emphasize decarbonization, circular economy, risk management, financial strategy, and sustainability. These initiatives demonstrate a commitment to long-term growth while minimizing environmental impact. The company has demonstrated its commitment to returning value to shareholders through two key initiatives: dividend payments and share buybacks. In terms of dividends, the company has consistently paid out significant amounts over the past 3 years. In 2023, it distributed $2,510 million, followed by $2,485 million in 2024, and $1,491 million in 2025. These substantial payouts indicate a strong focus on rewarding shareholders. In addition to dividend payments, the company has also engaged in share buybacks. As of December 31, 2025, it had a remaining authorization of approximately $931 million for share repurchases. This suggests that the company is committed to reducing its outstanding shares and increasing earnings per share through strategic buying back of its own stock. Concerns about inventory buildup or supply chain disruption are evident in various sections of the extracted summaries. On page 20, climate-related risks and uncertainties pose a threat to supply chains, while on page 21, changes in U.S. trade policies and tariffs create uncertainty for global supply chains. The Russia-Ukraine conflict and ongoing conflicts in the Middle East have disrupted supply chains, as mentioned on pages 22 and 24. Additionally, excess capacity in basic commodities has led to downward pressure on prices and decreased operating rates. Volatility in feedstock costs, shortages of intermittent wind and solar generation, and limited or single-source suppliers also pose risks to supply chains, page 26. Furthermore, inventory buildup is a concern, with inventory levels increasing from $137 million in 2024 to $141 million in 2025, page 105. The increase in finished goods inventory by $36 million and the decrease in work-in-process and raw materials inventories also indicate potential issues with supply chain management. Finally, concerns about commodity contracts used for non-hedging purposes suggest some level of inventory management or supply chain risk, page 150. Overall, these findings highlight the need for companies to be vigilant in managing their supply chains and inventory levels to mitigate risks associated with disruptions and buildup. And that concludes the financial summary for Dow Inc. Feel free to comment below, and I will be happy to answer them when possible.